Okay, well, good morning. I think that's a number of you have joined on to the presentation, and maybe one or two more coming on with us. But you're all very welcome to what will be the final Henderson Logie Trustee training for 2022. I'm Keith McPherson, Audit Partner and Head of Charities, and I'm delighted to welcome Christine Rolland, Director in Forensic Accounting, and she'll be talking to you this morning on the subject of fraud. If you want to ask any questions that come up during Christine's presentation, then if you type them into the Zoom Q&A feature, then I'll pick up on them later on in the session and feed them back and do that towards the end. But without further ado, then I'll just hand over to Christine to get on with her presentation. Thanks, Christine.
Thanks, Keith. Hopefully you can all see my slides now. I'm just going to get straight into it. We're going to go through a bit of an agenda here. So first of all, I'll probably explain why I'm speaking to you today. So as a forensic accountant, I've got experience of investigative work spanning a whole range of types of fraud, from embezzlement by employees, solicitors, accountants, to things like VAT fraud, mortgage fraud, even carbon credit fraud. And I use my accounting skills and investigative mindset in a whole different kind of range of cases. And today I'm going to discuss a few different matters. So I'm going to go through the evolution of fraud very briefly, look at how much fraud is occurring in Scotland, go through the types of fraud that you might see, and the fraud triangle, and then look at some risk factors and red flags, and finally some fraud prevention advice. Now, the Bible might say that there's nothing new under the sun, but in terms of fraud, at least, I think they might well be right. Fraud has been around, I think, since time immemorial. One of the earliest recorded financial frauds, at least, dates back to ancient Greece, to 300 BC, to Hegestratus, who took out an insurance policy on his boat with the deliberate intention of sinking it. Unfortunately, things didn't go to plan, and he ended up drowning because his crew got hold of his plan. So whilst these kinds of insurance policies and insurance frauds are rare these days, insurance fraud generally isn't. Whether that's fraudulent claims for new iPhones, or the exaggeration of losses with the impression that insured losses are fair game, and with insurers having deep pockets. The insurance fraud is definitely a big factor here. To give you an idea of the scale, the Association of British Insurers estimates that there were 107,000 fraudulent insurance claims worth about £1.2 billion in 2019 in the UK, and that doesn't include the 730,000 dishonest applications, which they don't quite class as fraud, but they're probably still not, in the utmost of good faith. So whilst there are always new scams to be aware of, you've got your cold callers trying to convince you that you're entitled to government assistance for a new boiler or some replacement windows, or I'm sure we've all had the text messages allegedly from DPD saying that you need to pay for redelivery of a parcel. There really is nothing new under the sun, and is that fake text message really any different to a young Michelangelo who, it's alleged, in 1699 tried to sell a forged sculpture of the Cupid to a cardinal in the Catholic Church? So it's really the method of carrying out frauds that's changed, and whilst they may have become more sophisticated, you have fake websites being set up that are so close to the real thing that they can sometimes be virtually indistinguishable. And you might see fake email accounts that at first glance appear to be from a legitimate source, from your bank or from HMRC. Ultimately, it's really just the method of perpetrating the fraud that's changed, and not when you distill them down, the frauds themselves. So in terms of how much fraud is occurring in Scotland, you will often see articles in the press from some of the large professional services firms that track fraud that's reported or that's pursued through the courts. You have things like the fraud barometers, fraud track. But the firms that produce these reports, they'll be the first ones to admit that measuring reported cases of fraud is really not indicative of the level of fraud that is actually occurring. There's always been, and there probably always will be, a massive difference between the level of fraud occurring and the level of fraud being reported. And that's for a variety of reasons. Often the victims of crimes generally, and of fraud in particular, don't report it to the police or to other authorities. And that could be embarrassment that they've been duped. It could be a feeling that there's no point, perhaps because they don't know who perpetrated the fraud, and they'll just be throwing good money after bad, or they'll be wasting their time rehashing the issue when there'll be no further forward. It could also be that people or entities would rather deal with things privately, particularly when it's something like an employee fraud or embezzlement, and if internal controls perhaps weren't up to scratch and an employee has taken advantage of them, the employer might not want that to be public knowledge, or they might just not want the bad publicity from knowing that they've been scammed. I think in general terms, when I was looking into this recently, I found statistics to say that only 40% of all crimes in Scotland are actually reported to the police, and fraud is no different, and that 40% may even be lower in relation to fraud. So in terms of how many high value, and that's classed as being worth more than £100,000. In terms of how many high value fraud cases there were in Scotland in 2021, it's quite surprising to see that there was only 16 high value fraud cases through the courts in 2021, and they were valued at a total of £5.9 million. And if you were looking at the press about this, you might have seen articles in the press saying that fraud has increased over 400% between 2020 and 2021. And whilst that makes really good headlines, it's probably not indicative of the true story. And it probably reflects more the fact that the courts in early part of 2020 were effectively shut down, and then the backlog in dealing with cases. There was actually only one high value fraud case through the Scottish courts in 2020. But that really is more to do with what went through the courts, and not the reality kind of on the ground. And that can be evidenced by looking at the levels of fraud that were recorded in Scotland. So these cases that the police have recorded, not necessarily cases that lead to a prosecution or even cases that go to court, but just cases that have been reported to the police and recorded as such. And for the year, the latest information we have is the year to 30th of June 2022, and in that year 16,500 cases of fraud were reported to the police. Recorded by the police. So that's, obviously a huge difference between the 16 high value fraud cases through the courts and the 16,500 cases of fraud reported. And I think interesting thing here is that cyber crimes is the main driver of this increase. Cyber crimes amounted to almost half of all recorded frauds in the year to 2022. And non-cyber frauds returned to pre-pandemic levels. So during the pandemic, what we saw was a huge drop-off in non-cyber frauds because people weren't cold calling, people weren't turning up on doorsteps. There wasn't quite that same level of traditional fraud, if you want to call it that. But unfortunately, things have returned to pre-pandemic levels in this year, resulting in a huge increase in fraud cases recorded. So in terms of the types of fraud, you might see, I'm not a lawyer, so I'm not going to get into this in huge amounts of detail, and please don't take any of it as legal advice. But I just wanted to cover very briefly the four main categories of criminal fraud that you might see in Scotland, and then also discuss very briefly the kind of civil fraud aspect. So first of all, first category of criminal fraud in Scotland is the common law fraud. It's a catch-all crime essentially, and it's defined as achieving a practical result by means of a false pretense. So it is where someone is caused to do something that they would not have otherwise done by use of deception, and the deception point is crucial. There needs to be either deceit or an intention to deceive for it to be classed as fraud. And in that, deceit or intention to deceive can be inferred from actions, but it can be an outright lie, or it could be silence. But the key thing is that there has to be some kind of deception or intention to deceive there. The second category is embezzlement, and embezzlement differs from just an outright theft of property. Because embezzlement is the appropriation of property, and it's usually money, but it could be other kind of property, without the consent of the owner, but by someone who has either limited ownership or a liability to account to the for the property to the owner. So ultimately it's someone in a position of trust who has breached that trust. So it might be an employee, it might be a treasurer, it could be a professional advisor, and that's the difference, the key difference between embezzlement and just an out and out fraud, sorry, an out and out theft. The third category of criminal fraud is uttering, and that's where someone, and the phrase is tenders as genuine a forged document, and that's to the prejudice of someone else. So I'm not sure if you're aware that actually forging a document in and of itself isn't illegal. It needs to be combined with the act of tendering it as genuine. So if I signed Keith's name on a document, that in itself isn't illegal. But if I signed Keith's name and then presented it to someone and said, you know, the Keith has signed this off, then that could be classed then as uttering. And the final criminal category of criminal fraud is statutory fraud. So that could be anything from fraud under the VAT Act, the Insolvency Act, the Computer Misuse Act, the Weights and Measures Act. It could be in relation to food safety. There's a whole host of statutory frauds on the statutes there. And finally, in terms of civil fraud, a delictual claim can be made to recover losses arising from a fraud, such as a fraudulent misrepresentation. So if someone pretended to be a supplier but didn't actually supply any goods and received payment, then you could pursue them civilly to recover your losses. Moving on to the fraud triangle, I mean, this concept may well be familiar to a lot of you, and it dates back to the early 70s to the work of an American criminologist and sociologist called Donald Creasy, who specialised in the study of white-collar crime. And the fraud triangle first appears in his book called Other People's Money, a study in the social psychology of embezzlement. Now, essentially, in any fraud, the fraud triangle sets out that three elements will be present to a greater or lesser extent. And those three elements are motivation, opportunity, and rationalisation. And I'm going to go into each of these aspects in more detail in the following slides. But for example, you might have an employee who has access to the company checkbook, or more likely these days to the online banking, and they have a lot of debt. So they have the motive, they have a debt, and they have the opportunity, they have the access to the online banking. But if they can't rationalise it, then they won't commit a fraud. You know, we're not going to stand here and say that every skint employee with access to company money is going to perpetrate a fraud. But if they come into a situation where they can rationalise it, then they are much more likely to commit a fraud. And I think that's an important thing to remember in the current kind of economic climate, is that rationalisation perhaps becomes easier when people have a lot of external pressures. From my point of view, in terms of fraud investigation, it's really crucial for me to understand when all three elements of the fraud triangle came together, because that's really key in understanding what happened, how it happened, and when it all began. Otherwise, you can end up, trawling through records that aren't relevant or considering timeframes that aren't accurate. And in terms of being able to pinpoint each of these elements, I would say it's probably the opportunity aspect that is probably the easiest one to pinpoint. When did they get the keys to the safe? When did they get the code for the online banking? When did they get added as a check signatory? These are all elements that can be fairly easily verified kind of through documentary evidence. Pinpointing motivation and rationalisation does require a bit more digging and a bit more kind of background information and piecing together different aspects of what's going on perhaps in an individual's private life. Now, looking at each of these aspects in a bit more detail, we've got first of all, motivation, or sometimes it's referred to as the pressure. And that can be anything from debts, it could be revenge, there could be family pressures. You might have someone whose spouse has lost their job, a whole host of things. There could be addiction issues, there could be coercion or blackmail. Someone has an external pressure on that individual to commit a fraud. And it could be a need that evolves into greed. Quite often you see that frauds are, when you investigate frauds, that frauds begin as fulfilling a need. So someone says, oh, I need £100 to pay this bill, I need £500, and then it increases, and then the £500 becomes 1,000, and the 1,000 becomes 10,000, and it escalates because you've moved on from just having a need for it to essentially the person getting used to that money and it becoming a greed issue. In terms of opportunity, the opportunity can come from poor controls, from complex transactions that no one really understands. So if there's something awry in there, would anyone notice, or would anyone understand that? It could come from exploiting errors, the abuse of authority, poor segregation of duties, poor corporate governance, a poor corporate culture that just allows issues to unfold and not be questioned. And it could come from a lack of effective oversight. And finally, the third point in the triangle is the rationalisation, and I'm sure you can all imagine people, saying these kind of things. Everyone else does it; they can afford it. They'll never notice. I'll never get caught. I'll repay it. No one will ever know. That kind of, I'm only borrowing it. I'm not really stealing the money. It's a cost of doing business. It's a victimless crime, and that's one that often, when I was working at HMRC, people often felt that not paying their taxes, underpaying their taxes, was a victimless crime. In reality, everyone is a victim of that crime in terms of being able to fund public services. And finally, people saying things like rules are made to be broken, and other ideas like that. So I thought it would be useful today to discuss the fraud triangle in the context of the last couple of years with COVID-19, and also the current kind of cost of living crisis, current economic situation, because that all has combined to create, I suppose, a perfect storm in which fraud can thrive, because it's increased the risk of all three elements of the fraud triangle occurring. So you have, the motivation, so the economic impact of the pandemic, and now the cost of living crisis, all that economic uncertainty it's created more motivations for individuals to commit fraud. That kind of the uncertainty in an individual's financial future, whether that was during the last couple of years, the risk of being furloughed, whether that was receiving a pay cut, the risk of losing their job, not knowing how they're going to pay their electricity bill, how they're going to pay for food. All these kind of things combined can increase the risk that someone will commit a fraud. And that could range from anything from a fraudulent expenses claim to altering invoices, to setting up false suppliers and making payments to themselves. And aside from the individual gain, the motivation for fraud can also be a pressure to achieve targets and give the appearance of doing well. So that might be not necessarily a monetary gain, a direct monetary gain for that individual, but it could be falsifying accounting records or manipulating balance sheets to show a healthier financial position, and that could keep lenders or funders off their backs, if covenants are or at least appear to be being achieved. In terms of opportunity, I think no workplace has been immune to the kind of changes in working practices. So we had kind of working from home, and now a lot of places have hybrid working in place. But I think a lot of the changes in working practices that were put in place since March 2020, that were put in very quickly and without much, if any, sometimes planning, have provided much more opportunity for fraud. So you have employees working from home, so it controls that worked perfectly well when everyone was in the office might no longer apply. So if you can't physically sign an invoice or physically sign to authorise a payment, how does that work in a hybrid or a virtual workplace? And it can also be things like a reduction in headcount, whether that was through furlough or redundancy, or probably more likely now, an inability to fill vacant positions. That might mean that segregation of duties is now no longer in place for key roles, because you've got employees taking on perhaps greater responsibility that was once split across a number of individuals. And finally, I think the firefighting that has gone on over the last few years, has resulted in management's focus being on, keeping the entity afloat, figuring out how to operate as a virtual business, how to cut costs, how furlough works, what the latest COVID restrictions are, how to service users not in your normal manner. That might mean that there's opportunities have arisen to exploit the diversion of management's attention and take advantage of that kind of unique situation. And finally, in terms of rationalisation, economic uncertainty, just generally from a kind of psychological point of view, has been proven to make it much easier for people to rationalise fraud. If someone is concerned for their future, finds their company loyalty being tested, then it can make it much easier for them to rationalise wrongdoing. Things like announcements of pay cuts or pay freezes, a reduction in headcount, or potential for redundancy, it can all add to the ability to rationalise fraud. In terms of some risk factors in relation to fraud, the risk factors essentially are the opportunities for fraud, going back to our fraud triangle, and they're probably the easiest to identify as risks and also the easiest to mitigate. It's much harder to mitigate risks related to the mindset of an individual. In terms of their ability to rationalise wrongdoing, it's far easier to put controls in place to mitigate the risks related to, for example, access to online banking or things like that. But some of the key kind of risk factors, as I've already mentioned, some of these, a reduction in headcount, and whether that is due to redundancies, staff off sick, staff leaving, staff having been furloughed, not being able to fill vacant positions. Any kind of reduction in headcount can result in employees taking on new roles or increasing their current roles. And this can result in, and I'm sure we've all probably been in that situation where you've got employees who are just kind of muddling through and perhaps not appreciating issues which would be apparent to a more experienced or a better trained or just a less busy employee. It can also result in the loss of controls that were in place. So, for example, two-person approval may no longer be possible or practical. And in addition, a reduction in headcount, particularly if it's been due to redundancies, can lead to a pressure on the remaining employees to report good results in an attempt to protect jobs. Now, with so many staff having worked from home and in some situations, they kind of work from anywhere, and it's probably now moving to a hybrid model for a lot of workplaces. Do you have to think, well, how has that change in the location of staff affected the control environment, and really have to consider controls that perhaps operated perfectly adequately when everyone was in one office? How do they work when staff are working remotely, or some staff are remote and some are in the office? I mentioned here the rapid growth or expansion being a risk factor. So whilst a lot of entities have struggled over the last couple of years, there are a lot of businesses or charities that have seen a growth in their business, an increase in their number of service users, people turning to them for assistance, and that growth, or where you have charities who are trying to diversify or rapidly expanding the scope of their services, means that they are kind of ripe for fraud from all different types of sources. So, for example, it could be invoice fraud. So if you're expanding rapidly and you have a number of new suppliers, how easy would it be for an employee to change the bank details on one new supplier, or to set up a fake supplier in amongst 10 legitimate ones? And I think, as I've already mentioned, that kind of firefighting from a management perspective, and the lack of management time to devote to the day-to-day may have resulted in control slipping and things going unnoticed or unreported, because management has been and continues to be so busy dealing with with major issues that their time has been diverted, their focus has been diverted from the day job. The next risk factor to consider is personal circumstances. So any kind of change in personal circumstance can have a massive effect on the likelihood of fraud occurring. So, you know, you might have an employee who's worked all through the pandemic. You know, they didn't have a pay cut, they weren't furloughed, but they might have other financial stresses. They might have a spouse who's lost their job. They might just have been, you know, living on the edge, and the current cost of living crisis has pushed them over that edge. So kind of understanding what's going on with your employees it can be really, really important in assessing the risk of fraud, because that struggle to make ends meet can really supply the motivation to commit a fraud, and that need might start to emerge. Now, putting in place new systems or new processes is, you know, it's an opportunity to put in really good controls, but it can also mean that employees perhaps don't know what they should be doing, or can use the confusion with the changeover to hide or disguise transactions. And this could be new processes or new accounting systems, new stock systems, any kind of system that your entity relies upon can raise this risk factor. A lack of effective controls seems a fairly obvious one. It can give rise to the opportunity for fraud, but it can also more widely affect the culture in a workplace. So if a lack of control is normalised, then anyone who asks for controls to be adhered to or to be put in place, they're less likely to be listened to until it's too late, and they're less likely probably to put up their hand and say, I think this isn't right, and there should be you know, controls in place. Similarly, changes in the control function, you know, as I mentioned previously, the changes in relation to workplaces over the past kind of 2.5 years has resulted in a change in the control function. So wherever there has been change, there's the opportunity for individuals to exploit any kind of perceived loopholes or, you know, confusion caused by these changes. And finally, the ability of individuals to circumvent controls is a massive risk factor. You know, you could on paper have really great controls in place, but if all it takes is for one individual to override them, then how good are your controls really? And is there any point in having all these great controls if one person can just override them? Looking now at some what I've referred to as red flags. So these are all things that kind of might raise suspicion. I'm not putting them out there as definite signs of fraud. They're just thinking of things to be aware of. Personally, I'm not convinced that the traditional profile of a fraudster is of all that much use. You may see articles saying that, you know, the profile of a white collar criminal or a fraudster, in very broad terms, is a white male over 30 in a position of trust, acting alone with no prior convictions. But if we're looking at, you know, employee fraud or management fraud, if we're looking at finance controllers, if we're looking at directors, if we're looking at managers, I'm not convinced that that profile narrows it down all that much. What is of more use, I think, is red flags in relation to the actions of individuals and not necessarily their kind of profile. So if you have employees who never take holidays, employees who work kind of odd hours, so, you know, perhaps they're in the office at odd hours with no real reason to, someone who doesn't let others have and their team have access to information that should be common. So, you know, I was involved in an investigation last year where the chief finance officer of the company was in the office every morning at 4 or 5 o'clock, and he was falsifying invoices at that time, and he was using the scanner, and he was, you know, using various things, and he could do that fairly innocuously and, you know, without anyone really noticing that he was doing it. But in this situation, he was in the office at all these strange hours, and two, he didn't give his team access to documents that should have been common. So he was the chief finance officer of a large company, but he wouldn't let anyone else prepare the VAT return or see the VAT files. It turned out there was a massive VAT fraud being perpetrated. So when things like that don't make sense, so for example, if someone won't share the bank reconciliations with the whole team or the whole finance team, then it should start to kind of raise your antennae, as it were. Also looking at someone whose perhaps lifestyle is out of kilter with their salary or what you know about their personal life, that's always a bit of a red flag. Other red flags, so in this day and age, the regular and continued use of cheques is probably quite a big red flag for me. I know some smaller entities may use cheques and for various payments, but to be honest, I don't know that there's that many places that will accept cheques to the exclusion of other methods of payment. So they wouldn't accept a bank transfer or something else. And similarly, the use of cash to pay suppliers would always raise my suspicions. It's possibly spending 4 years at HMRC. Anyone asks for payment in cash always has an immediate red flag raised by me. But depending on the nature of your business, cash receipts might be unusual. But also, it may not be. It really does depend on the nature of the entity. And if you were looking at charities receiving cash donations, maybe that is the norm for you, and that's fine. But even there needs to be good controls around cash. So controls around counting it, banking it, withdrawing it, spending it. You need to have really good controls around cash. If you're looking at purchase invoices, so invoices that you receive from suppliers, something that always raises my suspicions is sequential purchase invoice numbers. So because it could imply that supplier doesn't have any other customers. If invoice 10,001 is billed to you, and invoice 10,002 is billed to you, and invoice 10,003 is billed to you, then has that supplier actually sent any invoices to other customers? And if not, why not? Do they actually exist, or are they just someone submitting invoices for payment fraudulently? Things like round sum payments, particularly if they're made to the same entity or person, might raise suspicion. And likewise, if there are authorisation limits on bank accounts, for example, if payments over, say, £10,000 need 2 people to authorise, but payments under 10,000 only need 1, then repeated payments that are just under that limit would raise suspicions for me. And finally, if you're receiving invoices and there's not much information on the invoice, so it just says, as agreed, as discussed, then that might raise suspicion. You think, well, what actually is being supplied or paid for here? In terms of fraud prevention advice, I've just got some kind of some points here that I think are worth going over, and they may seem fairly obvious, but I think it is worth reiterating them. So training, I think, is a top one, and that's it's vitally important, and it should be ongoing or rolling training as well. So not just one-off training when there's a new system or a new employee, but refreshers to make sure that everyone knows what they're doing, who to ask if they don't, who to put their hand up to and say, there's something that doesn't seem quite right here. People make sure your employees know how to report concerns, and that might be a formal whistleblowing policy, but it might simply just be creating a culture where you can go and knock on the door and raise some concerns, or send an email raising concerns. And linked to the idea of having that kind of good culture in an organisation, good governance, such as having policies and procedures in place that are adhered to, maintaining asset registers, things like considering how your organisation's data is stored and backed up. So if that information was deleted or access was blocked, how would you operate? How could you keep going? Segregation of duties is a big preventer of fraud. I know it can be difficult, particularly in smaller charities, but wherever possible, it's really important to try and ensure that no one individual has sole control over key systems. Trying and implement dual authorization processes where possible. there is a balance there between you making sure that your organisation can just run effectively and isn't stymied by having to have approval or second person approval for everything, but it is important to have that in place to an extent. The corroboration of unusual requests is really important as well. So whether that's an unusually high value payment, a cash transaction, a new supplier, an urgent payment. You know, why is it urgent? Well, you know, the phone call on a Friday afternoon when everyone's trying to get out the door, it's always, you know, a big red flag. And think, well, why is it so urgent? Why does it need to be paid now? You know, someone's been asked for something unusual. You get, you know, scams where people have been asked to pay suppliers in you know, gift vouchers, or, you know, something, you know, if it seems a bit unusual, it probably is unusual, and that should be checked with someone else. Having review procedures in place is also really, really important, as well as having segregation of duties. And where segregation of duties isn't completely possible, review procedures on top of what you are able to achieve is really, really, really vital, because not only might fraud be uncovered from review procedures, but if people know that transactions will be reviewed, it can act as a deterrent as well. You know, it's unlikely that you're going to have the time or the capacity to review every transaction, and who would want to? Because you do need to trust your employees to an extent. But having some kind of sample checking in place, looking at exception reports is a really good focused way to do this. And one thing I would say is, if you're sample checking or looking at exception reports, is to change the criteria of what you're looking at. So if someone knows that every 10th transaction will be checked, then they know to make sure every 10th transaction is right. Or if someone knows that all payments over £10,000 will be checked, then, you know, they might put through payments at £9,500 without a second review, and they know it's going to be fine. Or if, you know, if they know that the first payment to all new suppliers will be checked, then it's easy enough then to make sure that that payment is legitimate, or at least appears so. And finally, having an effective anti-fraud policy and fraud response plan is a really great preventer of fraud, because it's kind of sets the tone and makes sure that it's communicated. As well as having the plan and the policy in place, you need to make sure it's communicated to staff, to funders, to end users, to suppliers. Make sure that you've set the tone that, you know, you are aware of the risk of fraud, you know what to do if there is fraud, and you will pursue individuals. If your policy is that you will always go to the police, then make sure that you do always go to the police. You know, don't you know, call their bluff here. And one thing I would wanted to kind of reiterate or to say is that whilst having an independent examination or an audit of your financial statements is a requirement, but it's not the auditor's job to uncover all frauds. You know, an audit report obviously states that financial statements are free from material misstatement. It doesn't say that no one has ever claimed an extra £5 in their expenses. And something that can be useful is kind of auditor or independent examiner rotation, because it can provide a fresh pair of eyes, and they might spot something that was previously unnoticed. And the investigation that I mentioned earlier that I was involved in last year, there was a fraud that appeared to have been going on for years and years and years, but actually it kind of came to light when a new auditor was appointed, and they started asking questions, and they just started tugging at a thread, and eventually everything unravelled. You know, they ultimately refused to have their accounts signed off, and they had administrators appointed as a result of it, and they end up. But I think I'd like to bring Keith in at this point and discuss with him from the auditor's point of view how he balances having the continuity of auditor and audit team that is obviously really important for understanding businesses, with this kind of the idea of having a fresh pair of eyes and making sure there is good governance in place.
Thanks, Christine. Yes, maybe just at this point, I think as we're finalising, I'll just remind people if they've got any questions that they would like to ask, then you could pop them into the Q&A within Zoom, and we'll come back to them in a second. I was also just reflecting that I'm delighted that I'm just back from a holiday, and so I've just lowered my profile in terms of the organisation, etc. Yeah, no, it's a good point. Christine mentions just around the auditor responsibilities, and I think the overall approach to, as I say, continuity is always seen as a good thing. But that fresh pair of eyes in asking, well, why does this transaction exist? Exactly what's the purpose of it? Does bring great value. You don't necessarily need to be changing the audit firm. But for example, making sure that maybe after a few years there's turnover of some of the key personnel. Long association with the audit is one where, for example, it's generally very good practice that 10 years is the maximum that the audit RI should be in place. So you may still be with the same firm, or you may have tendered and reappointed the firm, but taking the opportunity to get a different audit partner in charge of the audit, and or different manager in terms of that process.
Yeah,
One
I mean,
thing
sorry. I was going to say it could be as simple as, you know, changing the audit tests, because sometimes, you know, if you have a finance team who know what the you know that they're going to be asked for these reports, or for, to test this balance or this transaction, then it makes it easier for them to create a file around it to make sure it passes the audit test. So perhaps, you know, even things like that are a good way of spotting things.
Yep, absolutely, Christine. I think you know, one of our responsibilities is very much to consider you know, randomness in the act of some of the conduct of the procedures. In some respects, while it's added a lot of pages to the audit report recently, what we are now supposed to do is report, or required to do, is report on clarifying the extent to which the audit is designed to identify audit irregularities. And I suppose what I would suggest to trustees, certainly when I've been reporting on that, I've been highlighting that section in the audit report. But it is an element to consider and say, does that seem reasonable in the context of my organisation in terms of the approach that the auditors have taken to that? And feel free to ask questions about it, because you know, while we determine the appropriate procedures, we should be held to account for what we have done.
Do we have any questions, or I think that was there?
We've got no questions in at this point, Christine. I'll just maybe give that an extra minute or so just to see if anything comes in. I suppose you mentioned, or you focused quite a lot on obviously the changes that we've gone through with you know, hybrid and remote working, etc. Are there any early data in terms of some of those kind of fraud barometers and fraud statistics you were saying, where you know, remote working or hybrid working seems to be a kind of more contributory factor to the types of fraud that we're seeing?
No, I mean, the latest data that I have is for 2021. So hopefully, you know, in the next couple of months, we should have more data then for 2022, and that might give us more of an indicator of the patterns, if there are any, for fraud. But I think it's just something that to be aware of. Any kind of massive change in the way an organisation works means that, you know, you need to reassess your controls, and that can be a huge issue.
Okay, well, thanks very much for your presentation. As I say, no questions come through at this point. Obviously, we've got details on the slides. The session has been recorded and will be made available to participants as something to maybe dial back into if there was a point that you want to remember, or something that Christine has said that makes you think that's something I need to remember in my organisation. So I think we'll just wrap it up at this point with thank you all very much for attending. As I said, this is the final session that we've been running on our kind of webinar sessions for trustee training for 2022. It feels like in no time that this year has disappeared, and that we'll be starting to come back and thinking about what we'll be delivering for 2023. Until then, thanks very much.
Thanks.